guys, welcome to another episode of Crypto Corner, your crypto radar for all the latest news, reviews, market analysis, and tutorials that help you master the crypto markets. It's the 30th of November, we are entering the last month of this year, and today I want to discuss this headline here. Bitcoin is on its last gasp before the road to irrelevance, the European Central Bank advisors argue. Well, this is an article I found at the blog. It is actually referring to this article from the European Central Bank. It is actually a blog, so it is kind of the opinion of two researchers, two economists from the European Central Bank, Ulrich Binzel and Jürgen Schaaf. So they argue that Bitcoin is on its last gasp before the road to irrelevance. And why is that? Let's analyze this. Let's dissect exactly what they're saying and why are they saying it. So first of all, they start the value of Bitcoin peaked at $69,000 in November 2021. So a year ago, we all know that. This is when we actually topped and then we started this bear cycle before falling to 17,000 by mid-June 2022. Since then, the value has fluctuated around $20,000. Actually, it's below, but nevertheless, for Bitcoin proponents, the seeming stabilization signals a breather on the way to new highs. More likely, however, it is an artificially induced last gasp before the road to irrelevance, and this was already foreseeable before FTX went bust and sent the Bitcoin price to well below $16,000. No, not well below, just under $16,000. You see how things are being exaggerated and manipulated in order to actually prove a point. Well, first of all, let me start with the fact that when a central bank is talking about Bitcoin being irrelevant or Bitcoin being a scam or Bitcoin, anything negative about Bitcoin coming from a central bank, we already know that this is a narrative that they want to push because they have something to worry about, because Bitcoin is actually threatening their own status quo. Bitcoin is rarely used for legal transactions, they argue. That is true. I don't argue about that. This is because Bitcoin, first of all, Bitcoin's price is too volatile, and second, it is kind of a slow transaction. It's you have to wait at least 5-10 minutes before your transaction is included in a block, and sometimes even longer. So it's not great for retail. However, is that everything about Bitcoin that we want? Is that why we actually use Bitcoin? Because we want to pay with it? Not quite. Anyways, let's continue. Bitcoin was created, they say, to overcome the existing monetary and financial system. To overcome. Not exactly. Bitcoin was challenging the way the traditional financial system is structured and it's operating. It's not actually overcoming it. It is facilitating and it's improving it rather than overcome. Nevertheless, in 2008, the pseudonymous Satoshi Nakamoto published the concept. Since then, Bitcoin has been marked as a global decentralized digital currency. However, Bitcoin's conceptual design and technological shortcomings make it questionable as a means of payment. Real Bitcoin transactions are cumbersome, slow, and expensive. Okay, first of all, they're not expensive. They're cumbersome and slow. That's it though. Bitcoin has never been used, they say, to any significant extent for legal real-world transactions. I can argue about that. I mean, never, it's not true because it has been used in the past. I know people who bought houses with Bitcoin in terms of, I actually know the person who was the first person in the world to buy a house with Bitcoin. I know many people who shop with Bitcoin in different outlets that allow that. Microsoft for the longest time was accepting Bitcoin payments. In some countries you can even pay your taxes with Bitcoin, which was a big argument before 2017. I remember many of the naysayers, many of the people attacking Bitcoin were saying how they will only take it seriously when you can pay your taxes with Bitcoin. There are several states now in America and around the world as well where you can pay your taxes with Bitcoin. So to claim that has never been used for any significant legal real-world transactions, this is a very bold and false claim, right? In the mid-2010s, the hope that Bitcoin's value would inevitably rise to even new highs began to dominate the narrative, but Bitcoin is also not suitable as an investment. It does not generate cash flow like real estate, true, or dividends like equities, true, cannot be used productively like commodities, Not quite sure about that, or provide social benefits like gold. Bitcoin provides social benefits because with Bitcoin you have self-custody. For the first time in human history, we actually have a monetary means that are not controlled by a centralized authority. Up until now, up until this point, 2010, pretty much, all the type of money that we've invented in the world were always controlled by a single entity. In most cases, that would be a government. Before countries and governments, we were depending largely on bartering type of systems. And in that case, they were not necessarily controlled by a central authority. But ever since we invented money in the modern shape and form that we use today, they have always been centralized. They have always been controlled by a government or a central bank. And right now we're having here a central bank talking about Bitcoin not providing social benefits. I personally feel that the benefit of being able to control your own money and be a completely independent self-custodian of your own capital, this is quite a big social benefit. The market valuation of Bitcoin, they say, is therefore based purely on speculation. Now, many times we've talked about the fact that Bitcoin has intrinsic value, and in the very least, you can take the amount that is costing to produce Bitcoin as a good example of intrinsic value. Also, the fact that Bitcoin is censorship resistant and that you cannot stop someone from sending a transaction across the world to another country or whatever. This is very important because with banks, and up until now, we were using bank transfers and we were using MoneyGram and other third parties to transfer money across borders. All of these are centralized authorities. Each of them can actually censor your transaction. They can freeze your transaction. They can freeze your account. They can legally block you from accessing your own money if you are not convenient to that government or whoever, whichever power it is. And you can be inconvenient for a number of reasons. You could also be a criminal. You can be, you can be doing something illegal, so fair enough. In some of these cases, they could be justified, but we've also seen many examples when these kind of account freezers and, blocking people from being able to access their own money, we've seen many examples when this was not because of illegal activity. Let's not forget that in the early days, Wikipedia was one of the early adopters of Bitcoin. Why? Because PayPal and their banks and everyone who they were banking with actually froze their accounts. And they did that because WikiLeaks was exposing some very sinister mishandling of people's data by governments. I mean, this was not illegal. They had every right to let the public know exactly what is happening behind closed doors. And by doing so, they were not jeopardizing the safety of the citizens of these countries that they were exposing their government's misdoings. So this was not an illegal activity, yet they were blocked from accessing their own capital in banks. They were blocked from receiving donations via PayPal or even bank transfers, and they turned to Bitcoin because Bitcoin cannot be censored. And of course, I can't pretend that to a certain degree the Bitcoin value is based on speculation, but to claim that it's purely and only based on speculation is a misstatement in the very least. It's misinformation in the very least. It's a false statement. But let's continue. Speculative bubbles rely on new money flowing in. Bitcoin has also repeatedly benefited from waves of new investors. The manipulations by individual exchanges or stablecoin providers, etc., during the first waves are well documented, but less so the stabilizing factors after the supposed bursting of the bubble in spring. Now, I'm tired of hearing the bubble bursting. You know how many times I've been in this space since 2016 actively. I first invested in Bitcoin back in 2015. But I really started following news and everything around 2016. The amount of times I've heard this bubble bursting about Bitcoin, first of all, that it's a bubble, and second, that the bubble has burst. Every time we have a correction and we have a bear market, the bubble has burst. This is really the narrative that we see every time, every bear market. And this is now the third big bear cycle for Bitcoin. We've also had some big corrections along the way, like even during the 2017 bull run, we had a correction. Even the last bull run, we had a correction from May to September. So we do have these big corrections as well. I think May to September correction was about 40%. And of course, for many people, that was the burst of a bubble. And then we printed a new all-time high, and now we are going through a bear cycle that is lasting over a year. I mean, so far, it's exactly 1 year. I'm expecting it to continue for at least another 6 months, perhaps even around 9 months. This kind of a bear market, of course, we're going to be having ups and downs. It's not going to be only down, but I really expect the bear market to end towards the end of next year. So we can revise this statement about the bubble again next year. They say big Bitcoin investors have the strongest incentives, and mind you, this is the paragraph that actually gives away why they're writing such a negative article on Bitcoin. Big Bitcoin investors have the strongest incentives to keep the euphoria going, they say. At the end of 2020, isolated companies began to promote Bitcoin as corporate expense. This is what they really don't like. Some venture capital firms are also still investing heavily. This sentence here really tells you why they have such a big grievance against Bitcoin. It's the customers that they want to invest with them moving away, wanting to park their money in crypto. Because first of all, when it appreciates in price, it's a big appreciation. We're talking hundreds, sometimes thousands of percentage points appreciation in price. When it corrects and it goes through a bear cycle like now, it could be used as corporate expense, and they really don't like that. Despite the ongoing crypto winter, venture capital investments in the crypto and blockchain industry have totaled almost $18 billion as of mid-July. Maybe even higher amount right now. I don't really have the figures. Now, they talk about regulation here. Regulation can be misunderstood as approval, they say. Large investors also fund lobbyists who push their case with lawmakers and regulators. In the US alone, the number of crypto lobbyists has almost tripled from 115 in 2018 to 320 in 2021. Their names sometimes read like a who's who of US regulators, but lobbying activities need a sounding board to have an impact. Indeed, lawmakers have sometimes facilitated the influx of funds by supporting the supposed merits of Bitcoin and offering regulation that gave the impression that crypto assets are just another asset class. Yet, the risks of crypto assets are undisputed amongst regulators. In July, the Financial Stability Board called for crypto assets and markets to be subjected to effective regulation. The current regulation, they say, of cryptocurrencies is partly shaped by misconceptions. The belief that space must be given to innovation at all costs stubbornly persists. Well, why not? Since Bitcoin is based on a new technology, DOT standing for Distributed Ledger Technology / blockchain, it would have a high transformation potential. Firstly, these technologies have so far created limited value for society, no matter how great the expectations for the future. Secondly, they say the use of a promising technology is not a sufficient condition for an added value of a product based on it. I greatly disagree with that. I greatly disagree with that. First of all, the distributed ledger technology blockchain has for the first time offered an alternative, a decentralized alternative for record keeping. All kinds of data. You can keep all kinds of data on a blockchain as far as that blockchain network is really decentralized, and it is strong, and it continues. And we have now quite a few blockchain networks that have been going since besides Bitcoin, since 2013, we've had quite a few blockchain networks that are still going and are strong and are not only surviving, but keep building innovation, keep building new stuff. You can actually store all kinds of data on a blockchain, and the nature of blockchain is that you cannot actually alter that data. You cannot change it because it's too expensive, it's too difficult. Not every blockchain, of course. There are many networks that are weak, that they don't really have such a big hash rate. They can be attacked easily. 51% attack could easily actually happen on these blockchains with Ethereum Classic, we've seen it many times. We've seen a lot of attacks on Solana as well, and many other blockchains. So I'm not saying that every blockchain, every and any blockchain is safe, secure, and should be or can be used to store data safely, but many blockchains do. And Bitcoin is one of those blockchains. It's in fact the top blockchain when it comes to security. Anyways, the supposed sanction of regulation has also tempted the conventional financial industry to make it easier for customers to access Bitcoin. This concerns asset managers and payment service providers as well as insurers and banks. The entry of financial institutions suggests to small investors that investment in Bitcoin are sound. No, it doesn't. It doesn't suggest that. I personally do not know anyone, and I've been helping so many people get into crypto. I've been onboarding people since 2016, and I've been trying to grow the crypto community. So I know thousands of people that I have personally helped to get into Bitcoin and crypto in general. And then I know many other people who I didn't help, but I know them who are in crypto. I do not know a single person who will tell you that Bitcoin is a safe investment and that there is no risks, and that just because Bitcoin is now being offered by different banks as an investment product, that it is safe. No, it is not safe. And everyone will tell you that. It's the first thing that you know about crypto, is that it's very volatile and that is not a safe investment. However, the benefits really outweigh the risks. It's also worth noting that the Bitcoin system is an unprecedented polluter. Of course they're going to hit on that. Of course they're going to go for the energy consumption, because this is the only, actually they have 2 points. One more point they haven't mentioned yet, and that is the criminals are using it for money laundering, and of course energy consumption. You know, it's very bad for the environment. These are the 2 talking points that they will always use. I thought that at some point we're going to stop hearing these talking points, but they have been recycling these talking points since 2015, especially since 2017, heavily since 2017. First, they say it consumes energy on the scale of entire economies. It is an economy. Of course, it's going to have that scale. It is a world economy. Bitcoin is a world economy. It is bigger than the economy of Sweden. So yes, it is burning more energy than the economy of Sweden, but it is also bigger than the whole economy of Sweden. Bitcoin mining is estimated to consume electricity per year comparable to Austria. Okay, it is bigger than Austria. Fine, I'm fine with it. Second, it produces mountains of hardware waste. Oh, now we're talking about waste? Really? Is that where we're going? Bitcoin is producing the waste? Just wait until they create all the CBDCs. Let's see what the CBDCs waste is going to be. Is it going to be bigger than Bitcoin? Because we're talking about 83 countries, 85 maybe. Let me find it actually. All right, wait for it. Let's find out exactly how many countries right now are developing their CBDCs. There we go. Okay, as of right now, 105 countries, guys. It's no longer 80. 105 countries, representing over 95% of the global GDP, are exploring a CBDC right now. So, over 100 countries, sooner or later, are going to be having digital currencies. You think the waste that they are going to produce is going to be less than the waste of Bitcoin? I don't think so. Let's continue. The entire Bitcoin system generates, they say, as much e-waste as the entire Netherlands. First of all, Netherlands is quite a small country if we compare it to the global reach of Bitcoin. So if Bitcoin is compared to a single country, when Bitcoin is international and it is worldwide and it really covers the whole globe, I don't see that as a decent comparison. That is not a fair comparison. If you tell me that Bitcoin produces more waste than the whole rest of the world in a certain sector, that might be a sort of a leveled comparison. But Bitcoin being bigger than Netherlands, or being bigger than Austria, or being bigger than Sweden, of course it is. It is the whole world. And that waste is justified because, as I said, for the first time in the history of the human race, we actually have a means of payment, a monetary system that is in fact not controlled by a single entity, and you can really be your self-custodian. You can be your own bank. This is why central banks hate it so much. For the first time in the history of the world, you can actually move money within minutes from here to Australia or to Zimbabwe or anywhere in the world, and it's going to cost you a couple of dollars, maybe $5 at the most. Maybe less, maybe 50 cents even. They were saying earlier in the article that it is expensive to pay with Bitcoin. No, it's not. Maybe it is expensive to pay with a Bitcoin for a coffee because that transaction might cost you 60 cents, and that could be expensive compared to the price of a coffee. But if you're moving $100 million for $2 worth, or for $5 even for $10 worth, that is not a high expense. This is very cheap. And if you try to move $100 million via banks, it's going to cost you dearly. And it's going to be a long process. It's going to be at least a week, if not sometimes 2 weeks. And it's going to cost you hundreds. It's not going to be $20, which is the standard transaction fee for regular transfers that you're doing within the European Union. And if it is an international transfer not within the European Union, it's going to cost you even more. So definitely this is why they hate it so much, because it is rendering banks irrelevant. This is really what the article is about. The article is about how are we going to stay relevant when Bitcoin is actually going to render us into irrelevancy. Anyways, we're almost done with this. Promoting Bitcoin bears a reputational risk for banks, they say. Since Bitcoin appears to be neither suitable as a payment system nor as a form of investment, it should be treated as neither in regulatory terms and thus should not be legitimized. They really want it to not be legitimized. They really want that, because if Bitcoin was illegal, they would be so happy, they would be so empowered. But it's too late. It's too late for that, guys. Bitcoin is not going to be illegal, especially not in the developed countries. So nice try. You're not going to manage. The negative impact on the customer relations and the reputational damage to the entire industry could be enormous once Bitcoin investors will have made further losses. You know what? It's interesting that these kind of articles always come towards the end of a bear market, towards a bottom. And I'm not saying it's the end of the bear market, but we are definitely bottoming out right now. I mean, the rest of this bear market will be pretty much consolidation, and it will be a slow growth until at some point we actually manage to break a strong resistance and we start pumping and we actually indicate the next bull run. But the end of the bear market is not the bottoming. As we bottom out, this is not the end. In fact, this is the peak of the bear market. Our bottoming out is never the end of the bear market. We continue the bear trend after that. Yes, we would recover. After bottoming out, we would have a recovery. But, the recovery is an ABC correction. So it doesn't just start a bull run. First, we have an upside move. Then we have another drop. And then we have another upside move. And once we actually break through a key resistance, only then we are going to indicate the next bull run. And all of that price action happening before that breakout that will indicate the next bull run. All of that price action is still part of the bear cycle, but it is not the bottom. The bottom has occurred previously. So right now we are about to bottom out, if we haven't done that so yet already. I mean, you know that I'm still waiting for perhaps 14 or 13,000 Bitcoin to really hit that mark so that I can consider it to have been bottomed out. But even at 15K, this could have been the bottom. We are only going to know later on. We cannot know that during the time when we are bottoming. And that's also why I'm saying do not try to catch the bottom. Make sure that you're already having some positions in Bitcoin, because it is also possible that we are not going to drop lower than that. I mean, a small chance, but there is a chance that we might not drop any lower. A very small chance. I'm still expecting for us to bottom over the next couple of months, or over the next 3 months at least. Anyways, as we are bottoming out, this is the peak of the bear cycle, but the bear cycle continues after that for at least another few months. And what is interesting is that it's always during the bottoming, the lowest prices, is when we actually see these really scary articles coming up, really slamming Bitcoin, declaring it dead. It's been declared dead like 100 times already, or in this case, declaring it irrelevant. Bitcoin will never be irrelevant, by the way. The only way to make Bitcoin irrelevant is by another strong digital cryptocurrency, not a CBDC, which is what the European Central Bank wants to do. Of course, the European Central Bank is trying to push the digital euro, which they're already preparing. I'm not sure how far they're advanced with it, whether they're ready to launch it very soon or not yet, but definitely the digital euro is the CBDC of that Central European Bank, and they would want to be pushing that. We've seen it with every country, and we've not had that many, but we've had China, we've had India, and Russia as well. These are countries that are already having their CBDCs. They're ready. China is already using their CBDC. They have already tested it in many regions, and they're rolling it out as we speak. India is ready with their CBDC. They haven't actually launched it yet, but they're ready. And Russia is also ready, and they haven't launched it. But all of these three countries, as they're ready with their CBDCs, they started curbing on Bitcoin and crypto in general. China banned Bitcoin mining, and they banned transactions with cryptocurrencies. I'm not sure about trading. I think they haven't banned trading, but they don't really want transactions with cryptocurrencies because they want people to be using the digital currency of their own government. Right. India also imposed all kinds of bans, and several times they were imposing bans, then they were lifting them. They were even challenged by the Supreme Court. They were challenged because they banned trading. They banned a lot of the exchanges from trading. That was a couple of years ago. And exchanges actually went to Supreme Court to challenge this decision, and it was reversed. But again, last year we started hearing a lot of speculation about India possibly banning cryptocurrencies, a general overall ban, because they're ready with their CBDC and they want to be able to launch it and not to have to compete with cryptocurrencies. The same is happening here with the euro. Early this year, the European Union took quite a hostile stance against cryptocurrencies. And it is because they are wanting to roll the digital currency of the European Union, the digital euro. This is really what this is all about. I'm not even going to finish the article because this is it. We are pretty much at the end of it. But this is it, guys. This is the real reason why they're talking bad about Bitcoin right now. And they're trying to really scare people off from Bitcoin because they know right now we are at bottom levels of this market. Everyone is already scared. There is a lot of fear and panic on the market already by investors. So they're really trying to push away these few investors that would have the courage to enter the market right now, which is the best time to enter the market because historically, when you enter the markets during these times of bottoming out, even if Bitcoin goes to 14K, if you bought it right now at 16,000, whatever it is, 16,800 today, I mean, we did have quite a nice push on the upside, but I mean, we will be having more corrections. I'm expecting that Bitcoin will retest the 15,000 support again. So people who might be tempted to enter the market right now, which is ideal accumulation zone, they want to push these people away from crypto and Bitcoin in general because they're really worried that they're losing investors, and they also want to be able to push the digital euro or whichever CBDC they're working on, because I'm talking about all the central banks, not just the European Central Bank, but this is the reason they want to push people away from crypto so that they can really launch their CBDCs, their digital currencies, and they don't want to compete. This is it, guys. There's nothing more than that. If you saw this headline, and I'm pretty sure it will be a headline that you will see in several different outlets, not just at the blog here. I found it at the blog, but you will see that headline a lot, and maybe you will even hear about this on news and everything, on television and stuff like that. Mainstream media loves to bash Bitcoin when Bitcoin is down, and they also love to praise it when Bitcoin is up. Basically, what they're doing is they're hyping Bitcoin during a market top, and they're really slamming Bitcoin during a market bottom. This is what's happening. The fact that we are seeing this article right now is already indicating that we are at the market bottom. So make sure that you are not scared from these headlines. Make sure that you are following me here, because regularly I'm posting market analysis. And 2 episodes ago, I actually shared with you several charts that were showing how we are in the perfect accumulation zone. What I started saying, and I didn't finish it, is that even if you buy Bitcoin right now at 16,000, and even if Bitcoin drops to 14,000 or 12,000, it doesn't matter in the long run, because as the bull run starts and we go to 80,000 and to 100,000, you wouldn't really care whether you bought it at 14 or 16,000. That difference of $2,000 is not going to matter to you. And I know it, because I was buying Bitcoin when it was 400 and 500 and 800 and $1,000. I remember at some point when it went to 7,000, I didn't want to be buying it anymore. And people who are more experienced than me, they were saying, keep buying it, don't worry about it, because when it goes into the big numbers, 20, 30, 50K, you would be happy that you are buying it at 7,000. And at 7,000, I considered it too expensive. And yes, it actually did a correction from 7, it went to 4,000, which actually gave me the opportunity to accumulate even more. But I wasn't keen on it at 7,000. It was too expensive. It's the same right now. People think it's too expensive. Trust me, guys, when it goes to 80K and more and 100, which is definitely happening over the next bull run, you will be happy that you are buying it at 16K or even 17K or below 20K. Let's leave it there. This episode of Crypto Corner is sponsored by Keystone. This is a hardware wallet, self-custodial, cold storage, and it is fully air-gapped. There is no Bluetooth or Wi-Fi or USB connectivity. Therefore, it can never be compromised. You are only operating with QR codes, which you are scanning from your mobile phone application with the device and approving all transactions directly from your device with a QR code, making it the most secure device on the market. It supports more than 1,000 different cryptocurrencies, and it is compatible with Ethereum and Binance Smart Chain tokens, various EVM compatible chains as well. And right now there is a special 35% discount only for you guys, the viewers of Crypto Corner. The coupon code is BusyGeorgie. You have to apply it at checkout, and you're getting 35% up until the 8th of December. There is just a few more days left. Make sure that you use that wisely. This is one of my top devices, my top hardware wallets that I'm personally using on a daily basis. Alright guys, well this is everything for today's episode. I hope this is helpful, and if you like this video, show your support. Leave a like and a comment below, or share it with someone else who would also benefit from watching it. And while you're here, make sure that you check out the links in the description below, where I drop the links to all of the crypto services that I'm using and I recommend to you. And pick another one of my videos, and I'm gonna see you in the next one.